Good morning, everybody. It's Monday, June 10th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had July corn up 3 cents at 451 and 3/4. July soybeans were up 5 1/4 at 1184 and a half, and July Chicago wheat was down 6 1/2 at 621. Good morning, guys. We were talking before the show, just a couple of things looking at last week. Interesting to see with that big, bump in open interest that we saw through the week, across the board, in corn, beans, and wheat. Interestingly enough, we did have option expiration, so a drawdown in open interest coming into today, down 22,000 for corn. Beans were down about 13,000. So, Dustin, maybe a few thoughts to kick us off this week, and we'll take it from there.
Yeah, thanks, Dan. Yeah, so the COT data from Friday showed funds piling back into the short side for both corn and beans. So they got down to I think it was 4 weeks ago. They were only down to a net short of 71,000 contracts between futures and options combined. And now they're back up to a net short 212,000 contracts. Obviously that's a big part of where the selling is coming from, is managed money's ready and willing to jump back into the shorts again. As we head into this time frame, though, we don't have, this is as of the 4th, June 4th data, and we've had a little bit of a bump running into Thursday, set back a little bit on Friday. Now we're within a couple of cents of that high again from Thursday. Are we capable of going back above these major moving averages? The 1500 day are very close proximity. So, 6-7 cent rally from here, it kind of changes that momentum again, in our opinion. We are looking at that drier forecast, and that's initially seen as favorable, but it's also, the setup that if it doesn't keep rain, rains don't return, that it'd be right at that time frame where, we would be starting to think about what leads into pollination weather. So it's not much news really over the weekend, but just a positive start and a lower ratio as well. Beans are starting to falter against corn. We saw in the fund data that they piled back into the bean side as well. Sold over 40,000 contracts net short in that week. So another thing we'd be watching, if that ratio can drop below 2.45 to 1, that's no beans divided by D's corn. That would be kind of the momentum on the ratio to see if that carries as well.
Yeah, it's going to be interesting because, we were talking the heat right now. I mean, it's getting this stuff popping, right? I mean, we're getting this crop growing. It's looking fantastic by all accounts. I mean, most accounts. I know there's some areas that certainly are better than others. We are going to get the first bean condition number here, 3 o'clock, where we're starting from that piece. We're starting from a very high corn number, as we've talked about, in the last week here. So, I guess it'll be interesting, Dustin, as we go, if this 10 to 14 day precipitation number draws down and we don't get that water, we could flip that script pretty quick. And how interested are the funds going to be in pressing this thing, with a drier than normal forecast,
Yeah, well, the rains have been very consistent, and I don't think that anyone's really worried about dryness rate as we stand today. We all know, kind of that feeling is that you go into pre-pollination with the need for rain, and that's where the emotions start to rise a bit. Just hearing anecdotally from a customer base in Illinois, for example, like they've gotten almost to where it's rains have been almost perfectly timed, right? They've not been short on moisture, but not excess either. Got it almost exactly as needed in some of these areas like central Illinois. So things are looking pretty good. It makes sense why the ratings were so high last week. I imagine ratings probably still stay pretty good coming into this afternoon's report. But we don't usually make seasonal highs in mid-June, because we were worried about planting pace, worried about not getting it planted. We usually make seasonal highs in mid-June because if there is a bit of a moisture shortage and you're going into pollination, that's where you get peak uncertainty. So it's not a story yet, but certainly if we go another week and the extended forecast does not have that rain coming in, that's where, I think the market is still sitting quite negative, right? The opinion is shifted to be quite bearish in recent weeks, and that's led to a lot of positioning, as we've seen. High open interest. We know funds are very short, over 1 billion bushels of corn. And, we think that there's been quite a bit of forward marketing as well, just because, last year was kind of that recency bias. We don't want to go into the year without enough forward sold, I think is the general attitude that we've seen from growers. So if you go into the fact that we're sub cost of production and if we're fearing a sub trend line yield on the grower level, that's where I think that they stop selling, right? If it's dry, all of a sudden the market's able to free float higher because that selling pressure is no longer there to hold the market in line. I don't want to get too far ahead of ourselves because conditions are pretty good right now, right? It's just,
right.
I'm sure we'll be talking about it more in the next couple of days. So we keep watching it.
Oh, very good. Ben, got some thoughts from the East here this morning?
Yeah, a lot of eyes will be this afternoon on conditions, and like Dustin said, there's probably not a whole lot there to get excited about. And it's one of those data points for me that I tend to not completely hitch my wagon to. I think that it's a backwards looking data point, and we're in a forward looking situation on what does what does pollination weather hold for us, what happens in that end of the month report, where a lot of things can be kind of moved around in one big stroke of the pen. So there's plenty of corn here on old crop. I don't see any problem in the East. Any shortages towards the end of summer, which we see in this area. So we're just right now we're going to enter into a phase where the managed money short is going to have to decide if they want to stay on this thing and take the risk of whether or not cooperating at some point. Certainly, historically, the odds would be in their favor that they would be okay. But should they not be, I think that we've liquidated enough of the old crop, and I think that if we were to see a catalyst or some uncertainty, I don't think that the rally will be as orderly as the last one, where we took a couple of months to rally 45 cents, 50 cents. We've got moving averages stacked up right above the market in the 70s, and that kind of is that's their tick to add to their positions or to cover their positions. So, I would think that at a minimum, there's enough uncertainty that we would be looking at a sideways market for this week.
Yeah, sure. And one thing to point out, we will have a USDA report out on Wednesday. Crop production WASDE, that's going to be out. Dustin, your opinion, I mean, kind of a nothing burger historically as we wait for that bigger report at the end of the month, when we see acreage numbers and whatnot, but something to note that we will get some more data here midweek.
Yeah, the USDA doesn't usually change the June yield estimate too strongly. Just, it's early in the season, so trend line is still generally what we'd expect, unless there's a clear reason to change it or reduce it. And then again, it's still just USDA opinion in a lot of cases. It's not necessarily the market's going to be, finding much new information in this June report, but it can be something the market still uses as a catalyst to trade. That June 30th report, it's the last trading day of June. I think this year is the 28th. That's the bigger one where we do get new information. It's a stocks count and it's updated. It's a final planted acreage number, not final, but survey-based number. And really what I think this year in particular, we have had such a big change in total available row crop acres, especially corn and beans. So there's a large perception that acres should grow a little bit from where they were reduced. And, then again, we got kind of a little bit of a delayed planting, not perfect conditions. And we had a high ratio. That's what we were talking about earlier, that beans to corn ratio. Generally, 2.5 or above, which we've maintained this entire time, is a fairly strong ratio for beans. When you have, low margins, you're coming out of a high rotation corn year, 95 plus million acres corn last year. It makes sense that we would expect a little bit more of an even split of acreage, corn and beans, and then we had the planting conditions we had. So it will be very key for us to know for market direction where it goes after that report's released, both from a stocks count and the acreage number. So curious on how that comes out.
Yeah, it's going to be outside markets. We talk a little bit about them once in a while here. This week you got a Fed meeting, PPI data will be out, so we'll get it kind of a new gauge on, excuse me, where we're at inflationary wise. Making records in the stock market and things of that nature. We've talked, Justin has talked about it a lot with, money flows and where things are at. I mean, this is a pretty big week in the outside markets. Guys have really, you got a 49% chance the markets are showing for a rate cut in September. So virtually a flip of the coin. Everybody's looking for some sort of a symbol here, or a sign of what's ahead.
Yeah, that's going to have big implications for grains as well. Like the dollar index has had a couple of really good days here recently, and that's weighed on the real. So that's one kind of negative thing for beans as the real starts to decline. Now we're hitting the lowest we've been, and going back quite a ways here, a number of months. We're hitting lows in the real, so that's one thing to really pay attention to as well. It's going to trend along with that currency as it affects their competitiveness with South American, sales.
Yep, that'll be interesting to see, and we'll. I think they're meeting Tuesday, Wednesday, so you should have some of that data out on Wednesday afternoon. I think is when they'll probably release it. Rylan, we've got a couple minutes here before we come into the open. We were talking a little bit here this morning. Slaughter numbers were up about 13.7% in cattle last week. Hog slaughter was up 12.4%. Production up 12.3%. So production numbers ticked up a little bit. What's your thoughts as we start the week in the livestock category?
Yeah, I think we're kind of just back to a normal kill kind of regiment here. And I think that's what the markets is going to be focusing on to some degree. But, today's first notice day in the June live cattle. So, there was a big down and open commitment. So just kind of a rough week in general for the live cattle market overall. You had a little bit like steady to lower cash, around 185 in the south. And then like 298 to 301 in the north. So still steady to about $1 lower. So, I mean, I think everybody's looking at it just kind of concerned that we're going to see the stagnation in cash like we kind of saw last year, that it's just going to start to drift sideways here. But we'll see. We've seen the funds were pretty active in selling last week. They reduced their feeder position by about half, and they sold about 5,800 contracts of live cattle. So, they're starting to kind of come down here, and it just kind of felt like something maybe shifting a little bit. I mean, you start seeing, the beef market kind of stay up here, but typically we make a seasonal high in beef at this time of year. So I think there's just a lot of concern kind of going into the second half of the year now. And there's a huge question mark as to how we're going to perform. And just with prices being so high, you can kind of tell there's going to be some, a lot more concern. I think it's just going to bring about probably a lot more active hedging, towards the back end of the market. But I think most of the focus this week is really just going to be on what the convergence looks like between June and cash, or, which one's kind of right in the end from today's date. So we'll see how that goes. But I think, the real focus is going to be on the back end of the market, on those kind of premiums we're seeing. And if we can kind of hold them, for the next couple of weeks here.
Are you seeing back end? I know that, in the LRP market, those some of those deferred LRPs start to open up. You're starting to see some pretty good opportunities out in the back end for guys to get some forward protection on. Ryland, still at pretty good levels, or what are you seeing in that market?
Yeah, absolutely. I mean, we've had a lot of questions about it in just the past few weeks. How can I get my floor, a revenue guarantee in here and leave my upside open? I think everybody wants to be really optimistic from a supply standpoint, but on the other hand, everybody's just kind of waiting for a massive 2015 style break. We've seen some hints of that, but it hasn't really come to to fruition, on the long term. So I think just in general, like that's what everybody's going to be focusing on, is just kind of managing that risk out forward. I mean, some of the break evens you get into the first Q1 next year, and they're in the sky. So I mean, I think that's something to be just to be cautious of. And there's really not a bad time, in my opinion, to start to look at those kind of strategies to
That's
manage
very,
them.
yeah, no, very good. And for any of our listeners there, if you've got questions on, how to use these LRP products or looking to get more information, give us a call, reach out. Be more than happy to assist you folks in that deal there. So we just came into the open. We got July corn now up 1.5 pennies, 4.50 1/4. July soybeans are up 3.5, 11.82 3/4. And July Chicago wheat's down 5 3/4 at 6.22 is the last. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. We'll have crop progress conditions out at 3 o'clock Central here this afternoon. We'll talk about that tomorrow morning. Hope everybody has a good start to the week, and we look forward to talking to you tomorrow.
Thanks, Dan.